Yo, yo, it's your girl T True, Breathe Easy Podcast. We got a familiar face here today.
Hi, everybody. Jody from Tip Top Taxes in Lauderhill, Florida.
Yes, and we're going to talk some taxes today, some real stuff.
Yes, taxes.
Yes. So, I don't know. Where should we start?
I guess we could definitely start with deadline is coming up. So tax deadline is coming up April 15th, which is this Tuesday. But I did want to just clarify a few things about deadline because there's
Okay.
a lot of misconceptions about deadline.
Right.
So April 15th deadline is really for people that owe the IRS on their tax return to avoid an additional late filing penalty. So this does not mean that you can no longer file after April 15th.
Okay.
So we do have a lot of people that are still due a refund or think, oh, I didn't file by April 15th and I have to wait until January of the next year to file my taxes.
Again.
That's not the case. So April 15th deadline is to avoid a late filing penalty if you are going to owe the IRS on the current year's tax return.
And how would they know if they owe?
So they do need to obviously prepare the tax, but a lot of people will owe if they've underpaid taxes. We have a lot of gig workers. So if you drive for like Uber,
Right.
Lyft, Uber Eats, all of these other gig working places, they get paid by 1099,
Right.
which means there's no taxes coming out.
Right.
So there are cases where some people will still get a refund. Maybe they have dependents that they claim and that'll help offset some of the tax. And then of course there's deductions that you can take.
Right.
But a lot of single people that don't prepay estimated taxes, don't have dependents to claim even with their deductions, they typically end up owing something because they haven't paid anything throughout the year.
So, okay, so like for people who drive Uber or do Instacart and things like that,
Right.
how do they file their taxes? They use a 1099, but like how do they know what to put on their tax?
So there's
return?
certain deductions that they can take. So for example, let me use Uber because Uber is really good at giving you a breakdown of your
Okay.
deductions. So an Uber dashboard has like the mileage that they had while they drove all year, the fees that Uber charges, any tolls, parking fees, things of that nature.
And all those things they can put as a deduction.
Correct.
Okay.
So a deduction basically brings down your taxable
much you
income.
owe. Okay.
Right. So the less income that's taxable, obviously, the less tax you owe.
Right.
So the goal is to find as many legal deductions, obviously, as you can to bring down your taxable income so that you owe less.
Okay.
And another major thing that you can do as a gig worker or somebody that's just self-employed or working for a 1099 to avoid a lump sum tax payment at the end of the year is what we call estimated payments.
Okay.
And those are done quarterly. So right now we're making quarter one payments. January, February, March was quarter one.
Right.
And those payments are due April 1st to the 15th.
Okay, so that's another deadline for the 15th.
Right. So the estimated payments deadline is the 1st to 15th, but you can still make it late.
Okay.
But that's like the window that they want you to make it in because it's within the quarter payment structure. But you can also put yourself on payroll. So I have a lot of self-employed clients. You know, when you have cash coming in, you tend to, spend it. Like it's coming in and then you forget how it's going out.
Right.
Before you know it, maybe you made, let's just say even like 75,000 for the year, but it's gone at the end of the year. And you're like, oh crap, I didn't pay any taxes. I forgot to pay estimated taxes. So you could put yourself on payroll, get a weekly check or a bi-weekly check, just like you were working for a company, get a W-2 at the end of the year. And that helps alleviate the tax also.
So how would they do that? How would they put themselves on payroll?
So there are Tip Top Taxes offers payroll services. It's very inexpensive. It's only $75 a month. And that includes all of your tax filings quarterly with Florida revenue. Well, if you're here in Florida, I also do some states as well.
Okay.
So I have some companies that are based in Georgia. So we do regular federal payroll plus, they have Georgia state deductions. But that includes like all of that. At the end of the year, you get a a W-2, and all your tax filings are done throughout the year for your company. Your IRS deposits are made with the deductions of the tax. So everything's kind of taken care of.
Right.
So one employee is $75. And then of course it, goes on from there depending on how many employees you have.
Okay. So that would make more sense.
It does for a lot of employers, especially if you have multiple employees,
Mhm.
but some people don't like doing payroll because you also have to pay employer taxes.
Oh.
So as an employer and an employee, it's kind of like you're paying double tax, even though you're not. So we could get in more in depth on that maybe on like another podcast where we just talk only about payroll, because it's like a lot to it. But it does make more sense from a standpoint if you're making say 75,000 a year or more,
right?
Because it's going to alleviate that lump sum balance, like rather than your tax preparer getting all your deductions and saying, hey, you owe 10 grand,
right.
Now you can they can say, oh, you only owe 1,000 more, or oh, you broke even, or you're getting $1,000 refund, whatever the case may be. It's not like this big lump sum.
So when someone, say you file your taxes and you're getting nothing back, but you owe, how long do you have to pay what you owe?
So a payment plan, which is also called an installment agreement, is up to 72 months.
Oh, wow.
Now you do have to remember, of course, they're charging you interest over that time.
I forgot about that.
It's not crazy. It's not like a credit card where you're paying like 22.9% or anything like that. But obviously the quicker you pay it, the better.
Right.
But yeah, you can stretch it over 72 months.
Oh,
so
okay.
not anything to be super scared of. And that's the other thing too. People are like, oh, I owe them $2,000. I'm getting letters. They're going to put a lien. The lien paperwork starts coming when you avoid them. So no communication, no payments. It's been 2 or 3 years. Now they're going to start sending you the letters like, hey, we're about to garnish your paycheck. Hey, we're about to dip into your bank account.
I have a question about that. So how long, like if you've been working for the past 3-4 years and you've never paid taxes.
Right.
When do they start garnishing your wages or like trying to get their taxes paid?
Right. So first they're going to send you, it's like not a request. It's like a requirement to file. They're going to say, hey, you haven't filed. We know that you owe us.
Right.
So we're going to give you an opportunity to file the taxes first. That way, like, let's say, for example, you're a 1099, right? You haven't filed because you're going to owe.
Right.
The IRS, if they file for you, they're not going to give you your deductions.
Right.
They're not going to say, oh, you had mileage, you had this, you had that.
Don't know.
They're just going to file, what's the tax on 75K?
Right.
Right? So that's called a requirement to file. So they'll usually reach out first and say, hey, we haven't received anything from you. You have X amount of time to file it, or we're going to do it for you.
But like how long, how many years would they allow you not to file?
It's within the 3rd year.
Okay.
Yeah. So you want to file within the 3 years, especially with 1099s. And also to clarify with that, because there's a big misconception with that too. If you don't file 1 year, you cannot mix paperwork from 1 year to the next. So for example, I had a client this year. She didn't file a W-2 from 2023. So she's like, oh, I just want to put it on my 2024 taxes, just mash it all together. I'm like, you can't do that because it's from 2023.
Right.
So anything that's from 22 goes on 22. 23 goes on 23, so on and so forth, even if you never filed. But let's say you filed 23, but then you found a W-2 that you forgot to file. You would have to do what's called an amendment. Correct. Yeah. Okay. So there's no like mashing years together, or, oh, I want to save this school form for next year because I want to get a bigger refund. You can't do that.
All right. So like, let's talk about exemptions, because I know a couple of people that they file like 13.
So at that point, like, you might as well just mark yourself exempt because it's the same thing. Yeah.
Right, because there's like nothing coming out of your paycheck. So like, where would you say that works, or who would that work for?
So the number of dependents that you claim is the amount of tax that they take out. So for example, let's just say you file single and then you put the full $2,000 for one dependent. That means that they're not going to start taxing you until you make $2,000. Because they're under the impression that you have one child, which is going to bring back a minimum child tax credit.
Okay.
Right? And that child is under the age of 16. So the more you put on there, the higher your wages have to be until they start taxing you. So even in the case of where you have taxpayers that do claim dependents, So they'll put head of household with 3 dependents because that's how they file.
Right.
And then they wonder why their refund, oh, why isn't my refund 12,000 like
Right.
this other girl?
Right.
Well, because she put single 0, like no dependents, and had the most tax coming out.
Right.
And then filed her 3 children. So she got all that tax back plus the credits for her kids.
So it makes more sense that when you're filling out your what is
W-4.
it? Your W-4, that you put 0, but then when you're filing your taxes, you put the dependents.
Well, right. So it's like
that's if you want the bigger lump sum.
But just also it's like one or the other. So people with kids, this is directed towards you. And we'll specifically talk about people with kids under 16 because those are the ones that get the child tax, additional child tax, and more than likely earned income credit, depending on how much money you made for the year. It's one or the other. So either you're going to see a bigger paycheck because you have less tax coming out. Right. And then at the end of the year, you're going to see a smaller refund, right? Or you can see a smaller paycheck and a bigger refund. Right. It's vice versa, one or the other, not both. Right. So I have a lot of clients that they do file head of household, say they have 2 or 3 children, but they'll file single with only 1 child or single with only 2. They're not claiming all of their dependents on their W-4. So yes, they're not having max tax come out, but they're saving some of it to go on the refund so that they can get more of a chunk. Yeah.
It makes sense. I mean, I feel like, I don't know. I feel like it makes sense when you like explain it. Right. You know? But,
there's a lot of factors to it too. So like the amount of money that you make. So there's caps on how much you can make based on your filing status before the earned income credit phases itself out. You have to make money to get money for your children. Right. I want to be very clear on that. Excuse me. 2021 was the only year. I'm so sorry.
No, go ahead.
2021 was the only year that they gave us credit.
Yeah, no, I remember I remember, was it 2021? I remember it was, or was it that they had stopped letting you file for all your kids? Or it was like you would only get credit for like 2 kids or something, even if you had like 6. You wouldn't be able to file like all 6 or something. Was it something like that?
So you can file all your children. The thing is that in 2021, because of COVID, you didn't have to make money to get the credit for your children.
Okay.
So if you put 10 kids on there, you got $3,000 per child. Your refund was $30K.
Right.
That was only for 2021. Right. That has not happened again, and it didn't happen before.
Right.
So moving forward, I guess the point I'm trying to make with that is when you see these advertisements out, they always come out during tax time. Yeah. And they say, oh, for 1 child, you're going to get 5,000. Right, if you have 2 kids, you're going to get 10,000. And it's like they put a dollar amount on each child's head. Right. It does not work that way. First of all, you have to have worked, whether it be W-2, self-employed, 1099, whatever. Yeah. Social Security is not taxable income and cannot be put on your return in another spot to be claimed as income.
Okay.
Pulling out of your 401k cannot be put somewhere else on your return to be claimed as earned income to get money for your children. Right. So if you didn't work and your income was 0, you can put 25 kids on there. The refund is 0. It's still 0. Okay. And then also, like I mentioned, there's income caps. So think of it like a pyramid. Here you start at 0. As you start making money, you start getting the earned income credit for your children. Then you reach like that perfect amount that you made for the year with how many kids you have, and you get the perfect amount of a refund. Right. And then you start making more. Then you have somebody that makes more than that, and they start going back down until it gets to 0 again. Yeah. So just because you made a certain amount of money doesn't mean you're going to get the earned income credit for your child either.
So it's like the more money that you make, sometimes
it phases itself out. Yeah. So if you make $75,000 with 1 child, you don't get the earned income credit. So there's limits, and you can actually look those up online as well. It's called the earned income credit table, and it shows you like if you file single, this is how much you can make with how many kids before it phases itself out.
All right, so you remember like back in the day when people used to, that's why I said like I thought there was like a limit to how many kids you could file for, because you remember back in the day when people used to make people file for their kids?
Right.
Like why were they doing that?
So you get full credit for the first 2 kids and then partial credit for the third kid, but that's for earned income credit. Okay. So then child tax credit depends on how much you make.
Okay.
So a lot of people too will, split their kids up so that they can get more, however that works, but it's getting harder. Yeah. IRS is auditing more. So it's not like you said, like back in the day where you could be, great friends with your neighbor and you're like, hey, you want to claim 2 of my kids? Like it doesn't really work that way anymore. The audits for dependents seem to be increasing. Yeah. And then also the filing status plays a big part in that too. Single versus head of household. Yeah.
Okay. So explain that, because I don't understand single, head of household. Like what's the difference?
Right. So head of household obviously gives you a bigger exemption, which again means like they're lowering the amount of money that you pay tax on. But you have to make a certain amount of money to qualify for head of household exemption also. So if you make, let's just say you made $17,000 for the year and you have 1 child or 2 children, however many the case may be, and your preparer marks you head of household, you really shouldn't be. You should be single, because head of household, you have to make 21,000, I think it is now, before that exemption kicks in.
But aren't you, I mean, realistically, you are head of household.
You can be the head of the household, but your chances of being audited for paperwork to prove that you're the head of the household, when you have income lower than what the threshold is, it goes up.
That's so crazy.
Yeah. So again, that can play a factor in, like, let's just say you're claiming your niece. Yeah. You don't have to be head of household just because you're claiming a child. I want to make that so clear. So let's just say, for example, let's say me and you are sisters. Right. And we actually live together, right? We share a place together, and I have 3 kids. And I'm like, hey, you help me all the time. I want you to claim your niece. Right. You make $18,000 for the year. I don't have to mark you head of household just to claim your niece. You're going to get the same amount of money as if I mark you single. Okay. In addition to that, if you get audited, the only thing I have to submit for you is birth certificates to show that we're sisters and that that's your biological niece. If I file you head of household, now I got to show you are the one that runs that household. You pay majority of the bills, majority of the rent, the lease agreements in your name, have to supply utility bills. Like it just creates like this big web, right? Yeah. Whereas I could just say you're single with the same dependent, get you the same amount of money. And again, if you get audited, all I have to do is send some birth certificates to show that we're related.
You have to do all of that. Okay. So could there be 2 head of households in
the same address? No. It's whoever makes more money.
Suppose we make the same amount of money and we split the bills equally.
That one of you has to file single. That's so unless you can prove that it's like maybe a split unit. So I do have a couple of clients where it's like a
duplex.
Like a duplex. There you go. It's a duplex. So there is an A and a B. But the same, say you live in the same apartment. Yeah. One's head of household, one's single.
Okay, so when you get audited, what's going on there?
It depends on the kind of audit that you get. So there's so many audits, and that's another thing to point out. Audits are random unless you go to somewhere where they're just literally throwing stuff at the fridge to see what sticks. Yeah. And we know.
And I feel like that's what usually happens when those people get those $50,000 tax returns.
Yeah. And that's the thing, like, more than likely when you're going to a place like that, you already know, right? Yeah. So you know what's going on, you know what's going to happen if you get audited, and obviously there's not really any way to beat that audit because you never had the paperwork to back it up in the first place. But things like dependents, all of those documents should already be lined up with your tax preparer before you even file that. So if you're going somewhere where literally you can just walk in with your ID and a couple social cards and they don't ask for anything else, like, it's kind of a red flag moment.
Right. And that's the thing. I feel like people think because they haven't been audited yet that they're like free and clear.
Yeah, no, audits are random.
Yeah.
So they're selected by a computer. So when we e-file a return, it goes through a computer system first. It's like the IRS e-file system.
Right,
That's
yeah.
why we call it e-file.
And they usually will tell you if it's rejected or not.
Right.
Like, yeah.
And also that computer is updated every season. So it's getting smarter and smarter. It's looking for things. And again, like it doesn't matter where you go. So just to say like, oh, this was my first year filing with Jody and now all of a sudden I got audited, it doesn't matter. Like
it's random.
You could have filed on TurboTax and they'll audit you. It's just completely random.
Yeah, I got audited one year because this guy did my taxes and he was doing the same thing, throwing whatever and he put me as married.
Oh.
I got audited.
Yeah. You have to send like marriage certificate.
Yeah, and I was like, what am I gonna do? So I had to like call them and they explained to me, and then they ended up doing, and I had to pay back like $400.
Yeah. Right, which it can be way worse than that.
Yeah.
I have people that come to me and they're getting audited. They can't find their tax preparer to help them. They're in it for like, thousands of dollars.
That's crazy. And there's no way like that they'll actually start garnishing your wages.
Well, yeah, so you obviously have to set up a payment plan, right, to pay it back. And then in addition to that, any tax refund you get until that's paid off is gone in full.
Yeah.
So that's the other thing. IRS doesn't take partial payments. They're not like, oh, we know it's rough out there. We'll just take $2,000 this year. No, if your refund is $8,000 and you owe them 20, they're taking the whole 8 until it's paid off. So there's no like splitting it up with them.
How does that work with like child support?
So child support gets first dibs on a refund.
Wow.
After IRS. So outside agencies, it's IRS, of course, because they'll take their money. But then underneath them is child support, then student loans, and then state. So like food stamps, unemployment.
Yeah.
Like if you misrepresented your income and got unemployment or something, and then you owe unemployment back, they can garnish your refund as well.
And that sucks. Could you imagine?
Yeah.
Like I had a credit card. I know this is really not like have to do with taxes or whatever, but I had a credit card when I was like 17 or 18 or whatever, and I never paid it back. And they called me like a couple of weeks ago saying that they were gonna sue me for that credit card.
Right.
But that statute of limitations is in Florida is like 5 or 6 years or something like that,
yeah,
right?
it's 10 years in total. So you can actually tell them that they need to drop it off. The other thing is that they can't prove that they're the original creditor.
Right. That's what I was saying. And I'm like, and the guy was like, oh yeah, we're suing you. Remember that credit card you got when you were 17? I was like, 17.
Yeah. So when the 10-year statute is up, they send you what's called a 1099-C, a cancellation of debt. So the debt is canceled, right? They write it off,
right?
But you're responsible for the tax on the full amount that they write off.
Oh, I see. I never got. Maybe that's why they were trying to call me to try.
Yeah, it's probably getting close.
Yeah, trying to find me. No, it's been 10 years. 17.
Yeah, they can't even. Oh, girl, you look good.
Yo, thank you.
But yeah, so they can't even call you about that anymore.
That's what I was saying. When they called me, I was like kind of shook, but then I was like, hold on, let me do some research.
Right.
So I started looking it up and looking at the statute of limitations, and it was like, yeah, actually they can get in trouble for calling me and telling me that they were going to sue me, so.
Next time, hit record. The phones listen to everything anyway.
Yeah, and then it'll let them know this call is being recorded.
Exactly.
But yeah, you got to watch out for scammers too.
Yeah. Speaking of scams, let's talk about prep fees. Yes. I don't care where you guys go to file your taxes. Really, I don't, because, to each their own. But especially if you're going somewhere where you have all your paperwork, you have a W-2, these are your kids, and you're filing a legitimate return.
Right.
Please review your tax preparation fees. When I say I've seen it all, and literally just had a girl from Georgia reach out to me about a month and a half ago. I'm still working with her right now. This man charged her half of her refund. So young girl, single mom, first time filing, didn't know any better, worked the whole year, had a job, had a decent refund coming. It was in the $7,000 range. This man charged her $3,400 to do her taxes.
Oh my God.
So it's not like she even went to a place like, hey,
Yeah.
Do what you can.
Yeah.
You know, like it wasn't that.
It was legit.
It was like, hey, here's my W-2 I worked. Here's my kids, you know, birth certificate and social. Her refund was literally, her tax return was literally her dependent, her W-2. There was nothing else on there.
Nothing extra where it's like, yeah, she could have did it herself.
Thank you. $3,400. So if you go to a tax preparation office and they're only telling you how much you're getting back, red flag. Why can you not tell me how much the refund is, how much you're charging me, how much the bank is charging me for you to pull it out the refund?
Right.
And then, hey, here's my amount right there.
Yeah.
Get a copy of your tax return too. So many times I get calls to my office and they're like, oh, I didn't file with you, but I'm trying to look up, you know, my return on where's my refund, and I can't figure out why. And then now they have the ID.me, so you can see your transcript.
Yeah.
The transcript is totally different from what they were told.
Oh my God.
Yeah, because you got charged the difference. Yeah. That's why they didn't tell you.
So what's a typical amount that a prepper should charge?
So there's so many varying things with that. Yeah. So I don't want to like say anything.
So like, all right, like that girl that had the basic. Right there,
she's with her state because she was from Georgia. Mm-hmm. I would say like $300 to $350 max. Okay. Yeah. Maximum.
Oh, that's crazy.
Yeah.
These people are outrageous. Yeah. Well, I filed my own taxes. I do it on TurboTax, and it's what $40 I think it is, or something like that, to do it.
So be careful with TurboTax.
I know I heard some stuff about them too.
I don't want to say anything on live or on a recorded like, device.
Well, Jody said,
but just when I say that, I'll say this: compare. Mm-hmm. Because TurboTax, a lot of people use TurboTax and then they'll compare with other software or other preparers, and it's nothing what TurboTax said. I'll just say that.
Yeah, man, I've been using them for like the last 5 years.
Yeah. Yeah.
So, okay, so besides, like, you know, I know you're promoting yourself, but if someone wanted to file their own taxes, what would you recommend?
If it's a simple tax return, use the free file on irs.gov. Okay. Like if it's just you with a W-2, like you said, go on IRS free file. Okay. They have their own system set up. It's through the IRS, so you know there's nothing janky going on. Yeah. And it's absolutely free. Okay. It is free. And then, you know, there's a couple other ones out there, like, you know, if you have a couple of W-2s, you know, then they start charging you a little bit as you exceed the one W-2 threshold. Yeah. But I would just say, like I said, just no matter where you go, just ask questions, get copies of your return. Don't sign anything until paperwork is printed out. Like, a person should have no problem at all printing everything out, or like, for example, my office uses DocuSign. I send it to you like right then and there. It's not like, oh, I'll get it to you in like 2 hours.
You can look it over right now.
Yeah, like it's literally like, why do I have to wait that long? Do I have to change something? Do I need to doctor something? Like, it's literally, we live in a day of technology where it's like click, click, click. Yeah. So DocuSign, printed out, emailed, however. Yeah. I have clients come to me, they're like, oh, I'm getting audited, I need help, I can't find my preparer. Okay, do you have a copy of your return? No, his printer was out of ink. I'm like, my gosh. Look, I'm literally like, scratch.
Right. That should have been a red flag right there.
Yeah, we could email it. Like,
and how are you a big tax preparer and your printer's not working?
Just be careful is what I'm saying. Like, the tax industry obviously has a lot of, you know, sneaky stuff going on in it, but it's usually the younger females that have children that get worked over the most, because their refunds are the highest because they have the kids. Yeah.
All right, so like my son, he worked last year, but he worked for like a couple of months. He didn't even make $500.
Right.
Should he file a tax return?
How old is he?
He was 17 at the time.
Right. So you'll still claim him as a dependent. Okay. And yes, he can still file his own tax return, but because he's under the age of 25 and he is still considered a dependent, he's only going to get back what he paid in federal tax. So for example, if he made 500 and he had like, you know, $86 withheld,
right.
$86. That's his refund.
Wow, that's so crazy.
So have him use free file.
Right. That's what I'm saying.
Yeah.
Just
he
don't
can
even
get direct
pay.
deposit right to his account. But
Yeah.
that's what I'm saying too. Don't let IRS keep that money.
Right, right.
It's your money.
Right.
Takes what, 20 minutes as somebody that doesn't really know about taxes to go on and do a free file of one W-2. Get your $86.
Right.
Yeah.
Get that's the gas money.
Listen, yeah, I'm telling you, I promote this to people all the time. They're like, oh, my refund's only like $160. Okay,
Right.
you're gonna let IRS keep it?
Right.
No, they got enough of it. Get your money. Like 160 is 160.
So, all right. So when you work or whatever and they get taxes taken out, or are you really getting all that money back?
No, it depends on how much you make. Because again, remember, there's income thresholds.
Yeah.
So low income, yes, you do typically get a majority of it back. And then you start moving up to where it's like a portion of it, to where it's like none of it.
Right.
You know, to where you start owing.
So how are these like all right, Donald Trump for example, where they're like he hasn't filed taxes in how many, or been wanting his tax. Like, how do they get away with this stuff?
So he files taxes. He just has, you know, tax attorneys and tax accountants that use loopholes for him. Obviously, there are more loopholes for the rich,
right?
And that's like, you know, an open book. It's never been hidden. The more money you make, the less you end up paying, and I don't agree with it. As somebody that's been doing taxes, I see people that make even, you know, $150,000, $200,000 for the year.
Yeah.
And they're paying more than somebody that makes like a couple million.
That's crazy.
So it just depends too, like, again, how you have it set up. Are you like paying yourself on payroll? Are you making estimated payments? Are you doing charitable donations? Right. Remember, a lot of these rich people will write a lot of stuff off by giving to charity. Yeah. Right? So you just have to keep that in mind. Me personally, I think it should just be one flat fee across the board. Yeah. I think no matter how much you make,
it should,
who you are, it should just be like 10%. Yeah. Like 10% of what, you know, for the federal tax, it doesn't matter if you made 15,000 for the year or 15 trillion, you just pay 10%. And it would be so balanced and so even. Everybody would pay their fair share. Right. Just like church tithes, you pay 10%.
Right. So how does that work with like church? Because churches, they don't pay taxes, do they?
So it depends. Most of them are set up as exempt organizations, so they're 501c3s. So no, but they also have a lot of stipulations too. So it's not just like, oh, they're collecting all this money and they don't pay anything. They have a lot of rules they have to follow and a lot of paperwork that they file with their tax return.
Because I always wonder that. I'm like, when you know, because they make a big joke about it where they'll put like I've seen a meme where they put the pastor and he's got on all this nice clothes and this jewelry, and then his wife, she got on and then all the church members are in like scrubs with like dirty shoes. They are tattered and torn. Like, how does I never understood, like, I don't know. I guess it's just a personal thing.
You have to apply to be tax exempt. So it's like an application and there's a process to go through. But they, you know, they have a lot of stipulations and a lot of things that they have to keep track of. They get audited more often. So,
like that guy from New York. The pastor from New York, and he was
heard about it,
in his Louis Vuitton suits.
Didn't somebody rob him or something?
I think, and it was like on camera, I think. Yeah. Crazy.
Well, who knows? It was there in the new media for a minute and then it just disappeared.
Right.
As does everything, right?
Right. They let disappear what they want to let disappear.
They do. Yep.
Yeah, that's, I don't know. So, all right. So if someone wanted to reach out to you, and as a matter of fact, like you said, the deadline or whatever. Yeah. So if they still wanted to file their taxes and do everything, they can still go after April 15th.
Correct. So if you are going to end up owing, or you know that you owe the IRS and you file after the 15th, there is what's called a late filing penalty. It's based on the amount you owe. So I can't tell you guys how much it is. But you can still file after that. So for example, if you typically file and you have a refund, you have 3 years to file. Okay. So you can get that refund again. Like I've actually had a couple clients, they wait. So they won't file for 2 years, and then they'll file both of those years together so that they can get a bigger lump sum of money.
But it would have to be like, okay, my 2023 for 2023 and my 2024 for 20.
Correct. Not mashed together, but two separate filings. Exactly. So yeah, you can still reach out. Not taking any appointments right now for deadline.
Okay.
The book has been closed since this past week. But I do have appointments after the 15th, and they're actually already filling up. So
so y'all better reach out.
Yeah, so you could call into the office. The number is 954-226-1326. I do service the United States. There's like 5 states that I can't do. California is one of them. When you call in, I'll tell you. I'm sorry right now. I'm just thinking. But yeah, there's 5 states in total. And that's just because they have a requirement to be licensed, and some of them have a requirement that the tax preparer has to actually live in that state to prepare that state. But for the most part, across the U.S., federal for sure. 954-226-1326. And when you initially call in, you'll probably speak to Miss Antoinette, my wonderful, fabulous assistant that has been with me now since November of last year.
Oh, good.
She's really great. She'll get all your information, get you booked in. You can do a consultation if you're not really sure what you need. Maybe it's been some years. Maybe you owe from some years back and you haven't done anything at all, and you need to get that figured out. We can do that too. If you got audited this year, didn't file, whatever the case may be, you can give a call into the office and we'll, figure out what we need to do to get you back on track.
Okay. And suppose you haven't filed in like 10 years. So can you still go back and file?
Only if there's a requirement to file. So only if you owe the IRS. If there was a refund, you only have 3 years to claim a refund. So right now, 2021 is the last year that we can file for to claim a refund, but it expires April 15th of this year on this deadline. Okay. So then it'll only be 22, 23, 24. And of course,
because if you don't file, the IRS just keeps that money.
They keep the money.
They don't care.
So anybody that has 2021 that never filed, that never got the $1,400 stimulus check.
Oh, okay, that too.
Yes.
Okay,
so you can still April 15th, and you have to mail the return. There's no e-file because it's too old.
Oh, wow.
So you literally have
3 days,
Monday and Tuesday, to get the return prepared, paid for, because you're going to have to pay the preparer out of pocket because there's no way to take the money out the refund, and get it signed and mailed by Tuesday by the time the post office closes.
Get that $1,400. So people who didn't.
Correct.
And how would you know if you didn't get it?
So the quickest way to check is through the ID.me account on irs.gov. So if you go to irs.gov, you'll see at the very top it says log in. And then when the next page comes up, it says log in to individual or business. Obviously, you'll log into individual. If you don't already have an ID.me account, you'll create one. If you do, you'll log in. Once you either log in or create the account, you're looking for what's called Economic Impact Payments, EIP. And there's 2 tabs, one for 2020, one for 2021. Okay. Drop down the 2021 tab. If you see any amount of $1,400 or higher, because remember it was $1,400 per person. So if you had 2 of you on the return, you got $2,800. Anything $1,400 or higher, you already got it. Nothing is there, you didn't get it. And you literally have Sunday, Monday, Tuesday by the time the post office closes.
Oh man, y'all better check on that. That's $1,400. I know that can help a lot of people out now.
Yes, I've been promoting that on my page. I actually was on another YouTube channel a couple of weeks ago, and we promoted it as well. So if you did not get the $1,400, go on to the ID.me. You need just your driver's license. You upload the front and the back. They do a little like face scan thing to make sure it's you. You get in the account and double check if you got it. If you did not get it, apply for it.
So if you put the drop down and it shows nothing, that means you didn't get it. So you need to file and try to get that.
And our office is filing those. It's a flat fee of $150. Okay. And if you have wages for 2021, which it'll also show on there, that includes filing that with it as well. Okay.
To get that.
Yeah, because you might have more than $1,400. Right. You might have worked, part-time job and you forgot about it, and now you might have a $2,000 refund.
Right.
Yeah, but it's
check on that.
$150 paid up front because it has to be printed, signed, and mailed.
Right.
Yeah.
And then they mail it out, or you guys would?
They would mail it out.
Okay.
I wish I could leave my desk. I won't make it to the post office for you. I'm sorry.
Mailing out all that stuff.
Yeah.
Wow.
Yeah.
Jody, so all right, so what's your IG where people can follow you on IG if they want to keep up with?
So the IG is Tip Top Taxes, TAXES 954. And then I also have Facebook, which I'm on there, TikTok. The TikTok is Tax Talk with Tip Top.
Oh my
God. Little
That's a tongue twister.
Yeah, Tax Talk with Tip Top. I have a YouTube channel, the same address, but I'll get to that.
Okay.
I reserved the name, but I haven't started it yet.
Are you serious?
Every year. I've had it for 3 years.
Oh my gosh, no, you have to do that.
Yes, and Sean in town, shout out to Sean. He's the YouTube influencer that's had me on his show a couple times. He's like, girl, you know so much about taxes.
Yeah,
you need to get your stuff up. And I keep saying I'm going to do it, but I procrastinate about it.
I do too.
So, yeah, but
I'm a big procrastinator.
954-226-1326 is the best form of communication. If we're not in the office on Sundays, but leave a message.
Right.
Miss Antoinette will call you back. And then also the website, www.tiptoptaxes.com.
Okay.
Social media, you'll find me. Just Google Tip Top Taxes.
Google me, baby. Yeah. You heard what she said.
Lauderhill, Florida.
And she's in Lauderhill, local.
Right.
So you don't have to go too far.
Right.
You know?
But again, if you're out of state, call.
Same thing.
There's only 5 states that I won't be able to help you with your state return, but we can have that discussion separate when you call in. Yeah.
All right. So, but like you said that you said your books are closed. So even if people wanted to file for that $1,400 that they didn't get, it's too late to file with you.
No. The $1,400 we can do because that's a simplified. If you have a business, you have a regular tax return to do, the book is closed because I can't commit to saying that I'll get you in on time when I already have people that booked those slots, because then either I'm bumping somebody out or I'm telling you I can do something that I don't think I can, and I just won't do that.
Right.
But again,
she's ethical, guys.
Right. Very to a fault, right? But yeah, just give the office a call. But the $1,400, guys, if you've not got that, double check the ID.me, because what I don't want to happen too is that you pay to file, and then they come back and say, "Oh, you already got it." I can't give you your money back because I've already done the work.
Exactly.
So double, triple check that you did not get it. ID.me is the quickest and actually the accurate way to do it because it's on IRS. Right. They obviously know if you got it or not.
So you guys check that. Y'all want that $1,400? Check if you got it. If you didn't, reach out to Jody. She's gonna hook you up.
Yes. IRS issues, audit issues. Only thing I don't do is debt resolution. So like if you owe the IRS like $150K or something, where you need to do an offer and compromise. But I do have somebody great that I can refer. Yeah, absolutely. He's a former IRS agent. So Oh yeah.
So he knows his stuff.
Absolutely. 40 plus years.
Oh, really?
Yeah.
Oh, good.
Yeah. So he knows all the loopholes, right?
Right.
That's my mentor.
You got to know the loopholes.
Right. Absolutely. We don't want to pay Uncle Sam anymore.
I
know.
Have to.
He already takes enough.
Man.
Yeah.
So definitely.
Yeah.
So yes, thank you so much for coming and doing this and letting the people know, people who don't, because I'm pretty sure a lot of people didn't even know that $1,400 is still lingering out there.
Like 3 more days, but it's still lingering.
Right.
So, and you guys make sure you stay up with T True, my girl, Breathe Easy podcast.
Yes.
She's been doing her thing for years.
Right.
Now. She had me on like what? 4
that was
years
like
ago?
2 or 3 years ago.
Yeah.
Yeah.
It was a while ago.
Yeah.
Need to come on more often.
I know. Especially you need to come like earlier so that you can get more people
maybe we'll
to come.
Do something in like December,
right?
So we can like prep
everyone for
what they
to
need.
come to you for their taxes.
Absolutely.
So, like you said, where to reach you on IG?
What I say? Tip Top Taxes 954.
Tip Top Taxes 954. Lauderhill, Florida. Y'all reach out, Jody.
Yeah.
If you call the number, you're gonna talk to Antoinette.
Yeah, Miss Antoinette is the first point of contact, but she books all the appointments. I'm the one that deals with all your information. So
yes,
you will eventually get to me.
So y'all check that ID.me.
Yes.
For
Go
that
on there
money.
now.
Everybody loves the money. Y'all be able to, run it up your arm.
I know that's right. Hey.
For real, do the money spread, all of that. So check that out. Absolutely. Thank you, Jody.
Thank you so much.
Your girl, T True, Broward County, baby. Breathe Easy Podcast.
Hey.